Hey guys, welcome back. In today's video, we are talking about why shorts will not win, the AMC squeeze time, why we can break all-time high, and many more in this video. First, we take a look at this. I've never seen so many people concerned about a stock trading at 135. You'd think they would just leave social media alone as the shorts won, right? So interesting to see how the bashing needs to continue. Now, we've talked about these articles multiple times, and what we've seen is that essentially these haters for 5 years have screamed imminent bankruptcy based on debt that has been handled. The dilution narrative is old hat for these clowns as well. Ape Nation will not fold. Now, what we have talked about is just these relentless articles and is constantly talking negative about AMC. And when AMC releases good news, they're completely silent. And we've seen in the past that the reason why, and this applies for multiple other examples as well, but one of the biggest reasons for why these media companies releases articles on certain firms is because they are owned by a finance institutions, a hedge fund, who are making them push out these articles so it goes their way. And they always create narratives that will benefit them, whether it's releasing negative articles on stocks that they're shorting or positive articles to pump the stocks that they're holding. They use the media articles in their favor. And so we've seen them obviously talk about bankruptcy for multiple years. Every single year, they have talked about how in that year, AMC will go bankrupt. And they've been doing this for 5 years. And we still yet to see AMC talk about bankruptcy or even mention the news of bankruptcy. Now they're obviously talking about the dilution narrative, which we've talked about this as well. Typically, dilution is something you don't want to see. However, we have seen what this dilution is about. We have seen how AMC have used it in the past to push itself and accelerate. And so, yes, there is still negatives to do with dilution. Not to say that dilution is the best thing, but to talk about how AMC has used this in their own benefits, I think that's what shorts are scared of, because we talked about why that shorts want to prevent AMC from raising as much cash as possible because of what AMC can do with this cash. You can see here, in the past, and a big example is they talked about the Carvana articles, talking about how the company is going to bankrupt. And then you can see how it then went. And a big part of this was how a lot of short positions got crushed in this as well. And this was what we've said with how they use these media articles to talk about companies for their own benefits. But also just the fact that every time they do make these articles, they're not actually, 100% true. They're not saying it for the sake of retail. And so this is what we're looking at. The very fact Carvana can do it, and not to mention how backed AMC is, especially with the fact that AMC is obviously a theater industry, and we have millions of investors who are willing to consume their stuff. We'll talk about going to the cinemas, we're talking about buying popcorn, and even outside of that, I've seen plenty of people talking about how in other places they're able to buy AMC popcorn, which in itself is supporting AMC as well. So this is why we've said that these articles are used only for the purpose to help these hedge funds. We talked about how, firstly, they can create false narratives for the public to believe, but also how it influences the algorithms that trades based off of articles as well. Now, another big reason is that what we are seeing is here, imagine that, why would they buy into a dead stock? Institutions are buying, I'll continue to do so as well. So people are saying, AMC is going to be bankrupting, about how dilution is affecting AMC, but yet, despite all of this, people are still buying. And I'm not just talking about retail, I'm talking about institutions. If you're saying that dilution is going to just only harm the investors, bearing in mind investors include both retail and institutions, why are institutions still willing to then buy more AMC? They are seeing the same news, if not more news than us, more data points. So they understand the dilution is happening, yet they're still willing to buy into AMC. Why is that? Because they know what is up. And I think, the main reason why AMC has so much FUD is because the long institutions want to make as much as possible, but there's too many in retail. I wonder if it's the longs that are spreading the FUD. Longs are very patient. I mean, for real, just look at it. 3 shorts only, 347 long for AMC. So when you take a look at the stats for AMC, and I think this is something that is insane, is when you take a look at the institutional stats, 347 are long only. Only 3 firms have a complete net short position, and then 12 have a long short position. So we know that everyone in AMC is here for the long term. Everyone is buying into AMC. Now, firstly, this already raises so many questions, because if we're looking at a company that has 347 institutions who are long and only 3 who are short, why are we not seeing the price go up? And that goes to the corruption, the manipulation, and suppression that we have always talked about. Then we move on to the next point, which is, why are media articles constantly talking about selling your AMC, never buy AMC, bankruptcy for AMC, harmful to investors of AMC? Why are they mentioning all of this, but not the fact that institutions are continuously going long and then not shorting on AMC? This is just because institutions want to buy this. Institutions want to buy up all of AMC, and they can only do this by forcing the short sellers of AMC to pressure the retail, and then work together potentially to then push the retail entirely out. And that's why we're saying that potentially is also the long start spreading further, just like what we said in earlier. Institutions tend to release articles that benefits themselves. So if they realize there's a lot of money to be made and they can't buy into AMC because retail is holding, potentially they're releasing these articles. But it's just that in this case, we know that there is more at stake for the short sellers than there is for the long institutions. You can see, only way for AMC shorts to win is if company goes bankrupt. No other way. That's why this is a zero-sum game. We know it, they know it. It's why they're still hovering us, berating us, because these guys are stuck. Otherwise, they wouldn't give 2 fucks about AMC, yet they're still here with us. Now, I do want to add on my own thing about this, which is, I've always said this, there is 2 ways actually for AMC to win, for AMC shorts to win. Firstly, is if company goes bankrupt, which this user mentioned here. Secondly, is if every single, or at least 99% of the retail investors suddenly decide to sell AMC, and this becomes a entirely institutional owned company, because then they will talk about behind the scenes, because that's more plausible. They are able to discuss from firms to firms as opposed to firms to retail. So that's why I said there is 2 ways for them to win, and it's why we've said that they want to release these articles to get retail to go out, because then they won't have to pay $10,000 per share to the apes, and that's what they are afraid of. And just like what we said at the very start, if these guys are not stuck in AMC shorts and they've already made the billions of dollars they've claimed to have made and they're completely out, there is no short positions whatsoever, why will they still talk about AMC if they don't think there's potential? And on top of this, we just talked about how we're seeing so many institutions who are long on AMC. We're seeing all of these happening. We're seeing these so-called short sellers apparently not touching AMC whatsoever, yet we're seeing the short interest to still go up. We're looking at 124 million shares. We're seeing the days to cover increase. We're seeing the short interest percentage to increase. It really just showcases what is going on right now. And then when we talked about all of this as well, you can see from the increase of short interest. When we talk about all of this as well, not to mention with AMC is offering shares, yet they're still borrowing as many as possible. And that really just shows what is up. And it's what we said yesterday as well. And you can see, love how these frauds always manage to return 10 times as many shares as there is volume. And it's why we understand there are synthetics being put into the system, because they are able to firstly not only trade 3 times the float of AMC, despite the fact we know how illiquid AMC should be, but the fact that they're always returning so much more shares than there is volume, it really just doesn't make sense unless they are creating synthetics, which we know they are. You can see cost of borrowing AMC shares officially was reported at 1,000 to 1,200% and held for over a month, meaning back in 2023, they paid 100% of the share cost just to borrow. This was almost 2 years after the peak of share price. Now, this goes back to what we were saying as well, but it also goes back to many things. Firstly, we said that there's a reason why they're worried about shares, why they want retail to sell, is because they face this problem where they've had to pay so much money. The financing of these short shares were expensive. But secondly, the very fact it did go from 1,000 to 1,200% back to where it is right now, even though they didn't return shares, just goes on to what we talked about here, how they're able to somehow return 10 times as many shares. They want the tokenization of AMC. They want the reset of FTDs. The reason why they are pushing for these is because they are then able to cut down the cost price because they know how expensive it is. And you can see here from this particular user, AMC GME soon as they dilute is squeeze time. Difference between dilution not causing next squeeze plus 3x now is the SI. Same SI as right before Jan and June 2021 squeezes. I still believe we're going to have 2 squeezes like 2021, but faster. First over $23 minimum, second one breaking all-time high. Now, I wanted to break this down, which is talking about how these are obviously causing effects. Firstly, we have to realize is that potentially what we have with the share offering, and some people are saying this, and not to say that this is untrue because there is a possibility, is that there are potentially short sellers who want to cover. Now, before you then say that, okay, the short squeeze is over because we've sold 100 million shares for these short sellers to cover, you have to remember, we've already talked about how there are billions of synthetic shares that exist out there. Even if Adam Aram were to issue out 500 million shares, if they have shorted 10 billion shares already, 500 million wouldn't mean much. There will still be 9.5 billion synthetic shares that are out there. Not to mention, we think that the synthetic shares goes into the tens of millions, if not hundreds of billions. And so to talk about 100 million shares, even if they are solely for shorts to cover, firstly, it would increase the price. But secondly, it would confirm the fact that they are in need of shares to cover, that the shorts can't get out unless they somehow are able to get their hands on a large amount of shares. And then thirdly, that there are billions of shares that even 100 million won't be able to save them. And that, by covering these shares, it would obviously allow the price to go up. Now, I think AMC going up to $23 and even higher, I think AMC going to anywhere underneath 3 digits won't require a squeeze. A squeeze will allow us to get there, but naturally AMC should be there. But when we do see this momentum, when we do see AMC go up to these numbers, you're going to be seeing how shorts will be forced to cover. You're going to be seeing how AMC will go up into the hundreds of dollars and then into the thousands and higher. And that's why we talk about how AMC squeeze can obviously allow us to have that. Now, you have to realize, if we have been right, the deal's done already. Let that sink in. I'm here for 9 figures. If it were easy, everyone would do it. And that really just sums up AMC and the journey that we have had. Not to mention, you can see AMC's box office number. So we're still seeing how the actual box office is doing well. We're seeing how this is a good year for us already, and why that means AMC will do exceptionally well this year. Now, when we take a look at GME is also looking like they're getting ready to break out. And we've talked about how if GME breaks out, we're also going to be looking at AMC breaking out as well, because of the fact that they are forcing the same liquidity being used on one another, and the mutual short sellers will face the problem. Another showcase of why people are bullish on GME right now is these $25 calls that are being bought. We're seeing how the volume is increasing, very likely to showcase that someone knows what's going on. On the other hand, you can see brokers like Charles Schwab, who are obviously taking a hit. And that really just showcases how in a time like this, they are not doing well. Yet no one talks about that. No one talks about when these guys go down, they only talk about AMC. And it really just showcases how desperate they are. You can see from this guy, naked short selling is a national security threat because it functions as financial counterfeiting. And so this is why I hope to have more of a concern on. I really do think that if we are able just to have regulations to really look at naked shorting, dark pool usage, we'd already be seeing AMC in the hundreds. Furthermore, let's talk about something else, which is the gold allocation right now. You can see only 0.9% gold allocation. Meanwhile, big banks like Morgan Stanley and Bank of America recommend 20 to 30%. And this is talking about family offices. And it just showcases how the demand for gold and silver is still not yet to the full potential. And when it does get to the full potential, you will understand how it's going to get higher. We know that there's a limited supply as of right now. And when that supply becomes scarce, they're going to look for the companies as well. And that company, HYMC. Furthermore, US dollar extend losses against Japanese yen, last down 1.07%. So we can see what the market is feeling like right now and why they want to buy in. Now, another thing they're not mentioning is how insiders are dumping billions of dollars worth of stocks. So previously, when we saw people in AMC, when we saw the insiders in AMC sell their stocks, we saw media articles go absolutely crazy about it on AMC. Now we're seeing this happening and it's complete silence. No one's talking about how all of these insiders are selling their shares. I wonder why that is. Finally, we're also looking at, you can see in the whole overnight session, not even 20K silver future contracts traded at the COMEX. Liquidity is drying up quickly. Prepare for volatility bursts anytime. It just showcased this why we are early and why companies like HYMC is going to go up, why silver is going to go up, why collateral for these guys, for the banks, are going to fall, how they're going to get short squeezed, and how AMC is going to make a massive return on their investment. As always, then, this is F financial advice, so do take it as a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.